right, how's everybody doing out there? Welcome to another episode of Rockstar Partnership Live. I am fired up, Phil Barneo, and I'm with my beautiful wife.
Hey, how's it going, guys? I'm Heather.
Hey, and our mission is to help realtors and real estate investors scale their business and build freedom. Our Rockstar motto is always earn more, have fun, live free, and give back. And I love all the aspects of all of those things, right? We try to employ that into our lives every single day. We have a special guest on today that I'm excited about. My friend Rob Bowen, and Rob is an insurance broker, right? Rob, how are you?
I am good, Phil. Good to see you, and Heather, good to see you too.
So, Rob, I made a bold promise today that we were going to make insurance sexy.
Okay, we can do that. I'll give it a shot.
Okay. And Rob, so your company is Patriotic Insurance, right?
That's correct. Yes.
And you served our country. I just want to let everybody know that you are a veteran. Is that correct?
That is correct. I served in the Navy for 8 years.
Awesome, Rob. Thank you so much for your service. We love our patriotism. We love our country, and so we thank you for that. So getting into the insurance business, let's talk. How can we help realtors and real estate investors use insurance to scale their business and help them? Let's talk. So one of the things that we had started talking about was if you're a real estate agent, especially, we want to build a team, right? When we operate, we're always trying to work with people that can help us, get deals done efficiently. And so obviously one of those pieces of the puzzle is an insurance broker, a good insurance broker who understands insurance and can help us, as far as our team. It's like part of our toolbox as realtors, being able to recommend the right people to our clients. So some of those people would be attorneys, right? And obviously insurance agents go right along in that toolbox as well. And so on that note, I know that we were also talking about just making sure that when we're doing this, like the best agents treat their business like a business, right? Mm-hmm. And they build a team so that their clients can have a seamless process throughout the transaction. We have to facilitate the transaction, but we want to be able to help them throughout the process. So
and when Phil says build a team, what he means is a good network of referrals, basically, like you touched on attorneys. And so those are the people that we don't mean building a team of agents. We mean building a team that we can outsource, to our clients to help serve them better, like home inspectors, attorneys, insurance agents, and things like that.
Absolutely. Yes. Do you have anything you want to add to that, Rob, in your experience, like what you've seen?
Yeah, I think as a realtor, my view is the realtor is kind of the leader of the gang, right? They're the leader of the crew because you've built the relationship. You've been with that client for it could be 3 months, it could be a year. And now all of a sudden there's 4 strangers talking to this client. There's the appraisal guy, there's the inspection guy, there's the lender, there's the insurance agent. And I think that gets overwhelming. And I think things get dropped. I've been around this industry for a while, and I've seen very good realtors, and I've also seen, I'll call them new realtors that really haven't figured that out.
Okay, that's important. Yeah, I'm glad that you said that because you're seeing it from a perspective of the outside as an agent who's working with a lot of different realtors. So to make that judgment, I think should serve the people watching very well to understand that it is such an important part of the process of facilitating a deal is to be able to do that. So thank you for sharing that.
Yeah, and that's a good point too. Like as the realtor, you're the constant from start to finish. You are the constant all throughout the process. Other people are going to come into the picture and then leave, like the home inspector. Other people are going to be around a little bit longer, such as the attorney. But that's good to point out too. You should be that support system for the buyer.
Absolutely.
Yeah, and I think it's important too that as like everything in life, as you work with the same people over and over again, you get to know them, their nuances, what I know a couple of attorneys, I know exactly what they want. Mm-hmm. I know the lenders. So instead of the poor client getting between me and a lender because I need some information, I just ask them for the lender's name. It's just, there's a lot of times where the client needs to be aware of what's going on, and that's transparency is important, but to put the client in the middle of 2 people trying to communicate just gets very, very difficult at best. And it frustrates the client because buying a home is the largest purchase anyone ever does.
Yeah, typically,
right?
Absolutely.
And it's overwhelming.
And to make it more seamless by, having that team and being able to work, congruently together and knowing what they want, like you said, just makes it that much more efficient, makes you look like and stand out as a real professional. If you're an agent and you don't have a team assembled of professionals, like we're mentioning, you definitely want to do that. That's like one of the first things you should, be working on, because that's what makes you be able to facilitate the transaction so smoothly. And, and without that, you can't.
Yeah. And the other side too, I always say, is we all have different roles. So if we all stay in our lanes, but again, you have to trust that attorney. You have to trust. So as you work more and more, now you have resources, educational resource. Hey, my client had a question about insurance. Well, you can probably answer it, but okay, I have someone that will answer the question for you and spend a half an hour with you walking you through it well prior to you even buying anything. And that way the client feels comfortable, because the client needs to be in control, or at least the illusion of being in control.
Right.
And otherwise, instead of just being told, because as you all know, at the closing table, it's just like, sign a check. Do you pay this person? You pay that person, and everything's going on. And I think that overwhelms a lot of people, honestly.
Yeah. I left a closing last week, and just as we were leaving the parking lot, the buyer said to me, I'm still in shock. I haven't even processed this yet.
Oh yeah. I've bought 6 or 7 homes during my life, and every time I'm still in shock.
Yeah.
So it doesn't get better, but with a good team, with a good realtor that kind of facilitates that process and explains to the client what's going to happen. I mean, hey, you put a contract in. Awesome. Now here's all the flows that are going to happen.
Right.
And here are the people you need to talk to. And obviously there are rules. New York State has rules, just to, you give them options. And I think that's important.
Yeah.
But they're people you trust.
And let's not leave out, obviously, the investor, people who are flipping houses or burning houses or whatever. It's the same thing. I mean, you're assembling a team to be able to get deals done and to be able to make your life, more profitable, basically.
Oh,
at the end of the day, as an investor, we need the same team for different purposes. Obviously, we're not serving clients as investors. We're looking for deals, trying to get deals done, and then trusting the people that are on our team to help us get, those deals done and to have them become profitable deals.
Yep.
So,
and like I work with some flippers now, and this didn't happen day one. They had to trust me. It took a couple of years. I now have flippers that will send me an address and say, go. Hard money is this person, or we're doing cash. They know what I need, and I just need a quick text or an email, and they get a quote back in a half an hour. I know who the lender is. I know I probably know their credit card numbers. I'll get it from them. Hey, which one are we using today? The last 4 or 10004. And we can get this done. But that took time, right? That took trust. That took time.
Yeah.
Same thing with
I
working real.
you pretty quick, Rob.
Oh yeah, you did. Well, and that's important. That you have to have that trust. But that's, like you said, that's the team. So instead of me having to go to my client, I already know the hard money guy, or I know the bank. I just go right to the bank. I tell them what I'm doing, but I just go right to the bank and say, hey, listen, what's the loan? What's the loan number? What's this? What's your clause? And let's get this done.
So much easier that way, because I don't want to have to do it. Just get rid of the middle person and allow you to just get the information you need, get the right information for a binder or whatever, and then it's just, you're good to go. So how can we let's talk about insurance now, right? Like, let's see what we can do here to help some agents and investors understand insurance better. And so that they can be, because I think at the end of the day, whether you're a realtor or an investor, education and is about power and being professional. If you're not smart, if you're not constantly educating yourself, then you're not really a professional. And at the end of the day, that's what it comes down to. And you should be educating yourself if you are a real estate agent. You should understand how mortgages work. You should understand how insurance works to a large degree, right? You should understand, to how attorneys work and all of these things that really contribute to your professionalism and your competence as an agent to really help other people and facilitate the deal properly. So let's talk and give some agents and investors some insurance education in the most sexy manner possible.
I will try. I think
go ahead.
I think the biggest thing is when you would propose doing this. The best way for me is whether it's a real estate investor, whether it's a home buyer, whatever. We see it so many times where someone will call our office and say, "Hey, I'm buying a home." Well, my view of the world is the average agent's going to think, okay, they're buying a home, they're a home buyer, they're going to live there, all this other stuff. I think as a realtor or as an investor or as a home buyer, you need to be a little more detailed. What is that home? Are you moving there? Is this a secondary home? Is this a seasonal home? Are you bringing Phil in to do renovations? Is Phil adding a second story to this place? Those things are important because most people are shopping for price as opposed to getting the right policy. So we've learned to ask a lot more questions and verify that. But I think as a realtor, if you're working with real estate investors, it's just to say, hey, listen, you're going to need a policy that's going to cover you for the renovations you're going to do for 6 months, or it's going to be vacant, or it's secondary, or I call it the life cycle.
That's a big one, the vacancy, right? Especially for investors. We've had issues with other people who, didn't disclose that it was a vacant property, and then the insurance company is fighting you, to not pay it because
tooth
you're
and nail.
supposed to be there. It's different, right? So let's talk about it. I'm going to just run through, I guess, a couple different types of insurance that agents or investors should be kind of aware of. We can kind of touch on those, and you can give us your thoughts and stuff. So, obviously, people first and foremost probably think about homeowners insurance, right?
Yes.
So we can start with that, but there's some other ones like flood insurance that's very important when it comes to real estate industry and helping clients. Then we can talk about different things as far as maybe bundling them or an umbrella or something like that to help. And then for investors, we're talking about landlord policies, and then we're talking about insurance for flips and stuff, which would cover vacant, properties and whatnot. So let's start with homeowners insurance. Tell us a little bit about, what people should understand, the important factors and proper coverage and what's in the policy.
The biggest thing is I actually say this to people. They're like, I need a policy. Is your toothbrush going to be there? I mean, it's something as simple as that, because that means it's a homeowner. You can only have one homeowner policy.
Okay.
As a person, right? You can only live. Now, there's an argument about snowbirds and which one's your primary, and we can figure that out, but you can't have two homeowners policies for the same person. You can only live one place.
One primary residence.
One primary residence. So that's your first thing. And homeowner is the least expensive, right? Because you live there, you're taking care of your home. So that's where a lot of people go with the pricing. People have to look at the homeowner. The mortgage company only needs me to have a value that protects their mortgage. That's their responsibility. Nothing
that's
against
all
the mortgage.
Care about, because that's their liability, but that's not the liability of the homeowner. They have more to lose.
They have a lot more to lose. So
equity in their home that they hopefully have.
Yeah, hopefully. And the way I do it to people is I say, listen, we start the conversation at $150 a square foot. And Phil, you could argue with me all day, Rob. I could do it for less. But that gives someone
not in today's market.
yeah, exactly. But at least it gives them I need to give them context, right? I say your 3,000 square foot home is $450,000. They're like, what does that mean? I'm like, it's $150 a square foot if that burns to the ground and we have to rebuild. Mm-hmm. So I have to assure at that level.
So they should understand the replacement value is what we're talking about.
Exactly.
Here. Yep. So the mortgage company is going to want to have their liability, which is the amount of money that they're lending in the form of a mortgage. They want that covered, but they don't care about the rest of the things that the actual homeowner needs to consider, which would be any equity, contents, replacement value, right, of the home.
Yeah. So what we do, and then that building coverage, everything else, all the other coverages I'm going to go through here, is a percentage of that. So by definition, if you mess up the first number, all the other numbers are wrong. So you've got personal property, which is everything that's not attached to the house.
Okay.
You've got loss of use, and this is a homeowner's policy.
Are your kids considered personal property?
I don't know. I'm not going to go down that rabbit hole, but thank you. Actually, kids are a huge liability. I have 4 of them, so I'll just throw that out there. You got loss of use. That's an important number. So if you have a claim in your home and can't live there, and let's say it's a total loss, you probably need a place to live for 9 to 12 months.
Right.
You need to understand that number. The big number out there, which no one really focuses on because no one's ever talked about, is liability. You buy a house, you are now responsible for that property. And we live in a very litigious society, and people get hurt and people sue. I am a believer in the way you're going to go bankrupt is not by having less of replacement costs. It's getting sued. People still sell policies at $100,000 of liability. Attorneys are $500 an hour. That math goes pretty quickly. So I tell clients I want at least $500,000, if not $1 million in the home. And I also want an umbrella, because liability is, people will probably strike me down on this one, but it's like gambling. It increases at a decreasing rate. What are the odds I spend $2 million to fight a lawsuit at your house because someone got hurt? Right. That's someone died, someone's disabled if we're at that level. So it doesn't happen. But if you have 100,000 and we spend that, we stop, and your assets, your home, you're done.
Yeah.
You
and
know?
it's hard too, because insurance is a tough sell to a lot of people, because
Yeah.
you don't, when you need it, then it's, then it's important, but it's not important because most people don't really think that they're going to have to need something like that. But then when it happens, it's like, if you're not covered properly, that's when it hits you. It's like, you don't value your health sometimes until it's gone, right? You don't care about insurance until you need it.
Well, I tell people all the time, I'm an expense item, but when you need me, and the other thing too, I see this with new home buyers, because I'll see their quote, I'll see their policies a couple of years after the fact. Once you do that, you've never bought a home in your life. You have no idea, you kind of go through this process. You have this policy and you just keep it for a couple of years. And, we have inflation, but if it's not written properly to begin with, 3 years down the road, it's really not written properly. And the only way you're finding out, it's like, we don't play the price game. Show me what you got. If you've got good coverage, awesome, stay. But you start at
what proper coverage should be, and then
that's all I write.
And then you'll work with them backwards a little bit to to help reduce the cost, but not do it to a point where it's going to not serve them properly if they need it.
100%.
I think that's the biggest lesson here for, I think, what we're talking about with homeowners insurance is just having understanding that your coverage is there's a lot to it, right? It's not just like, oh, there's just this homeowner policy. Well, no, that consists of all these items within it, right?
Yes.
That you need to understand and make sure that you have, proper coverage amounts on. Otherwise, when you do need it, it's not going to be there. Mm-hmm. And so that bargain policy you thought you had actually just kind of kicked your ass. And now you're,
Yep. And I've had people come into my office who have had bad claims and because they weren't covered correctly. The other thing you have to keep in mind is there's something called full replacement cost. You mentioned that word. Full replacement cost means I have enough money to rebuild your house.
Right.
There are policies called actual cash value. What that means is the insurance company depreciates your $400,000 asset to a very small number because it's an older house. It hasn't been upgraded. So when you have a total loss, mortgage companies don't let us write them. I don't write them for flippers personally, but they're out there, and that people aren't going to understand that. They're going to look at the price, they're going to look at the coverage and say, okay, I'm good. And if I underinsure it, the insurance companies can go to actual cash value. And that's very, very dangerous. So it's just sticking to your guns. The insurance companies are getting smarter. They pull in a lot of information. They tell us what the replacement cost is, and then we just make sure we're right. Okay. But I can play with your deductible. And the other thing to push out there is you want to have as high deductible as you're comfortable with. Flippers, for example, I go 5,000 or 10,000, depending on what the lender will let me do, because you're never filing a claim unless it burns to the ground. Right. Because the contractor, sorry, Phil, but the contractor probably caused the problem. He's just going to fix it. You're just going to pay him extra or whatever. A homeowner, you want to be at 1,000, 2,500, you need to make sure you have that money if you have a claim, because
Right.
you don't file $3,000 claims. I'll fight you on that. This is when a tree comes through.
Well, let's go there for a second,
Okay.
because a lot of people don't understand that. You help people understand that they have an insurance record, right?
Oh yeah,
And so when you file claims, that goes on your record. It's like a driver's record, right? It's like,
that is correct. It's
and so-
actually called a clue database, is what we call it.
right. And so if you put stupid small claims on your record, that basically makes you look like you are irresponsible, so to speak, right?
High risk.
High risk.
Yep. Oh, you're hard.
And so it's not worth it, because then your insurance rate's going to get jacked up, or your policy is going to get canceled.
Yeah.
And so you only want to use it when it's worthwhile to use. You definitely don't want to file small claims. A lot of people don't know that. It's just not as common information. So that's good thing you brought that up.
And keep in mind too, in New York State, there's a law. If you call the insurance company, you call New York Central, and they all do this. This is the law in New York State. And you call and ask a question about a claim. Hey, my pipe just broke. I'm just curious if it's covered. They have to file a claim.
Wow.
So now I have what are called $0 claims that I see.
Yeah.
Where
Wow.
they filed a claim by making a phone call, never filed it, never put any money in, and that counts. That's strike one.
So what then what they should do is call their insurance agent.
100%. Call us.
Call
and the
you.
first thing I will say, I mean, obviously if someone says, hey, a tree just came through my living room, we know that's a claim. My first call is to a restoration company. I have my team, so to speak.
Yeah.
They're on my phone, and I text them. It's not a phone call. It's, hey, I need help. My client needs you out there in an hour. Those guys are awesome. They do what they do. If it's, a pipe broke in my house, I'm not really sure. I'm like, well, let's turn the water off, make sure they're comfortable, and then let's get an estimate. Because until we have an estimate, it might only be $1,000. I don't know. I'm not a contractor, right? That's up your alley, Phil. And as you know, water, it could do a lot of damage that you can't see.
Absolutely.
So I say, get someone in there. Let's get an idea. And then we decide as a group, hey, do we file this claim? Because the way insurance works, you have 2 claims in 3 years in a home policy, you're getting dropped every carrier.
Remember that watching.
Yeah.
2 claims in 3 years on a homeowner policy, you're getting dropped.
That's
You're getting dropped.
Like a claim is a negative mark against you, right? In the insurance world, I mean, you make a claim and now the red flags are going off.
Yeah, and we know we put all of our claims into a database, auto and home. We don't share those. I mean, I'll share it with a client like, hey, are these your claims?
Mm-hmm.
But that's not publicly available information. So every time you get a new homeowner's policy, new auto policy, we're running those reports to see what kind of how many claims are out there.
Gotcha.
And, I help some people buying homes because I can run the clue report on their new home. And if there's a claim on it, that claim follows the house and the person.
Really? So explain that. I was not aware of that.
It's double jeoprdy is what it is. If you've ever seen that movies, but here's how it works. So if I'm going to go buy a new house and I can run a clue report and see that the owner had a claim 2 years ago.
Okay.
So me as the new home buyer, my rates are going to go up because the house had a claim. Now we can work with the insurance company and say, okay, let's find out what happened. What did they do to fix it? Like a broken pipe, not that big of a deal. Something bigger, we want to understand how they fixed it. We can mitigate that expense, but that claim is going to be on the house. You see a lot with foreclosures with pipes breaking in December because someone forgot to turn the heat on. See it all the time. So people buying foreclosures, we run clue reports for them and say, hey, there was 2 broken pipes over the last 3 years. It's going to be really hard to get you insurance. We can do it, but there might be a lot of damage that was never fixed, right? I mean, again, water's behind the wall. So again, the average homeowner files 1 claim every 17 years. That's a national average.
Okay.
Keep that.
So don't be filing 2 in 3 years. You're just
no. You're just. I mean, I had a poor gentleman who filed 4 claims in 3 years because he just kept calling the company, and his policy went from $800 to $4,000 a year for 2 years while those claims cleared up, and then I was able to move him back. And he had to have insurance because he has a mortgage.
Yeah.
Oh, wow.
It's horrible. So just call your agent, ask a question.
Yeah. Utilize your agent. That's what they're there. They want to help you. You want to help us. Obviously make the best use of the policies that you're writing for us. So, let's move on to a couple other policies here. So, I mean, briefly, we can touch on some flood insurance. That's important in the real estate industry. Talk to us a little bit about that, like the FEMA maps or whatever. And
okay, the way I work with real estate agents is as they are usually these are buyer agents.
Yeah.
They'll find a house. I use private flood insurance, so I have a company that brokers this out, and I can literally put an address in. That's all I need. Tell me the address and tell me if it's got a basement. I can tell you the exact flood zone it's in. I can tell you how much above or below that flood zone it is. And I can give you a bindable quote for your client because we do not run credit for flood. We run credit soft hits for all the people freaking out that I'm running hard hits like the lenders. Soft hits on your credit doesn't affect your credit score, but I can give you a bindable quote. So I've worked with realtors where I can, here's your quote at $600. They're in an X flood zone. X is good. X is 1 in 500 years. Mm-hmm. A as an alpha or AE alpha echo are high risk, 1 in 100 years.
Yeah.
Okay.
But we can very quickly, and I have a lot of lenders will just text me addresses or whatever, and I can tell them because especially now with this market, people are finding homes. They're like, oh, this home's great. It's a bargain. Well, nothing's free in this world, right? So there's something wrong. And 90% of the time it's in a high risk flood zone and the flood policy is $7,000 a year. Now, you can negotiate with the seller, right? So you can say, I've got to pay this. Can you negotiate the price down or however you want to do it? But at least I've given you a number. And the other thing I like to say too is my opinion at the end of the day doesn't matter. The mortgage company 3 weeks prior is going to run a CoreLogic flood determination report. They all use the same company. That's what matters. So I might say, hey, it's low risk because it's up on a hill. They're going to tell me it's high risk. It becomes a conversation, but 90% of the time I can go, yeah, you're good, or here's the price. I mean, it's expensive, but flood is, we've had 4 1 in 100 year events in the Hudson Valley in the last 7 years. So something's going on.
Yeah, that's good to know. Yeah.
Say again?
That's good to know.
Yeah, it's the problem is once there's a flooding event like in Washingtonville, that was a low risk flood zone. They had 2 flooding events. It takes FEMA about 3 to 5 years to update the maps. So it's still in a low risk flood zone. The lender doesn't require it.
So buy right now.
Yeah, buy quick. So we're actually trying to change the conversation. It's a hard conversation to change that. Most people should have flood insurance. You can go to the FEMA flood program. And I tell people that's great. And sometimes I will write that. I do have the ability to write that. But do you really want to have a claim against the federal government? How long is that going to take? If you think insurance is bad at doing claims, try doing it with FEMA in a catastrophic event.
Anything with the government is bad.
It's going to take you years to get it. And they're there as a backstop. They're there to protect people and give them loans. And they're good at what they do. They just take a long time. So
you got a question about bundling and stuff, right?
Yeah. So whenever I work with a buyer client, sometimes they'll ask me, well, I already have my insurance through Geico, my auto insurance. So does it pay to bundle the insurance policy if they're already with a company and they like their rate? Or does it pay to kind of shop around and maybe change and, switch over and bundle with a different company? Like, what are your thoughts on if they're coming to you with an existing auto insurance?
If their existing auto is with Geico only writes auto insurance. So there are carriers that they'll give you like a 5% discount. They have relationships with large home insurance companies. What you should do, and this applies to State Farm, the captive side, Allstate, the captive side, and independent. I'm an independent broker, so I have 15 different companies I can quote. You want to bundle together because the carrier will give you a 20% discount on your home and a discount on your auto. Now throw an umbrella on top and you get a 5% discount through. We're all pretty consistent about how we do it. The trade-off, Heather, is at the point you're trying to sell the house.
Right.
You don't want an agent to be messing it up by trying to do the auto. So what we try to do in my office is we talk about, because I want to know their auto from a liability. If they have state minimum and they're buying a house, they could lose their house in a bad auto accident. So I want to have that conversation, bring everything up and put an umbrella. But what I'll say to them is, listen, we can quote it with the bundle. we'll price everything. Let's get the home done, right? Let's keep the realtor and the lender. Let's keep those guys happy. And then we have 30 days after the house closes to do the auto and just move. So that way there's not too many moving parts. So some clients want to do it up front, but you want to bundle it every single time, unless for some reason the auto price is phenomenal and the house price, it happens maybe 5% of the time where we have people split. But yeah, bundle, because you're getting this, because we see better claims experience when we bundle everything together. So that's why we give the discounts. So definitely 100% bundle it every single time.
Yeah. So in that case, I would just tell a buyer, it varies on a case-by-case basis. You're going to want to talk to your insurance agent, but in most cases, you're going to want to bundle with the same company and you'll get a discount.
Exactly. And you're getting a discount just because you're buying it from the same company.
Right.
And 20%, can become a big number. That could be a couple $100.
Yeah.
And you get a discount on your auto too.
Right.
So.
Right. I had another question too. I kind of looped it in with the last, but what I meant to ask with the loyalty was, like, I know even Phil and myself every couple of years have switched in insurance companies, shopping around for a better rate.
We light our house on fire and we put,
Thank you. And you're on a recorded line.
Yeah, right. So does it pay to shop around every few years and try to get a better rate, or does it pay to stay loyal to one company? Because just before we hopped on, I was reading something and it said loyalty pays because you might save on your deductible if you stick with the same company over a number of years. Is that true?
That is true. A lot of that's going away. There's really two parts to your question.
Okay.
The loyalty side, there's a lot of carriers, if you stay for 3 to 5 years, they might lower your deductible, charge you the same amount. So that's a good thing, especially in your auto. Mm-hmm. But you also have to remember, on the other side, as insurance companies, we have an insurance score for everybody. We don't share it. We have an insurance score. So if we see people bouncing,
right.
And they actually did a study that people that bounced, they did over like 20 years. People that bounced insurance companies for 20 years, they ended up saving about 4% over those 20 years. So, and it's the hassle of changing. It's a lot of it. You got to move you got to pay for it. So I tell people what we do is every year renewals come down to us and we know how much of an increase it was. So if we see a double-digit increase, we go in and figure out why. Maybe you lost a discount, maybe whatever may have happened. But if we're seeing 6 to 8% increase, especially now in New York, that's average. So there's no reason to start shopping it. Okay. The other thing you don't want to do is shop between two independent brokers.
Right.
Because assuming you give me the same information, I'm getting the same pricing as the other guy. So find a broker you like. I can shop 15 carriers for you. And the carriers now, we call it a hard market. It means prices are increasing. They're now being selective. So they can, if they love you guys, but don't like me for whatever reason, where I live, my credit, they're just going to crank my rates up until I leave, but they'll keep you guys there. So they're now being selective into who they're keeping. Okay. And you can do that in a market where you have dramatic price increases. So.
Sure.
Awesome. In closing here, I want to give the investors a little, some couple, tidbits on the insurance for them. So when it comes to, let's talk about home flippers. We'll talk about really, really briefly on a landlord policy and then a policy for flippers, just for the investors out there. Let's help them.
Okay. So with a flipper, the first question I ask is, are you doing any structural work? And all I simply mean is load-bearing walls, or you're playing with the trusses in the roof. And most people go, well, I'm not sure. My next question is, do you have an engineer and an architect? If you do, you're doing structural. So if you're going that route, we have to go to a true builder's risk policy, which is also used for new home construction. Yes. Same policy, one just has a building, one doesn't. So most fix and flips are not structural. So Correct. Then what I'm writing is a vacant under renovation. And you can literally gut it to the studs because you're not changing the physical footprint of that building. Now, I also am a big believer, again, in liability. I don't write anything under $1 million. And a lot of them I send to commercial. Like if someone's brand new, I start out with, okay, here's kind of your training wheel policy, so to speak. We'll just get this done. We'll keep, I got you insured. As I start getting a flipper that's doing 5, 10 a year, Now we start having conversations around, okay, is it separate LLCs? Is it one LLC? And I'm going to put a big umbrella. And I have a process. If you get certain numbers, now we need to do something differently. But there's, it's, the problem is, again, it's vacant. It's under renovation. I need to know exactly what you're doing.
Right.
And, sometimes they don't know. The other thing is, are you doing the work yourself, or are you using a contractor?
Right. You put your sweat equity into it and stuff. Or
Yep. And we're okay with that. But if you're using a contractor, make sure the contractor's insured, and make sure your LLC is listed on their policy.
Right.
Same reason how GCs and subs work. So
yeah.
On the landlord side, you have to, I believe you should, in your lease, should make all your tenants have renters insurance.
Okay.
And there's two reasons for it. Number one, the landlord policy will probably have $1 million or $2 million of liability. And if the renters have $500,000 of liability and something happens in that apartment or near that apartment or at that house, now you have two policies. Now the insurance companies can figure out who's at fault. If the renter doesn't have it, now the big policy at the landlord level takes it, and they're not happy, right? They're like, wait a minute. The other reason you want it is in the landlord policy is called loss of rents. So if you're a landlord, I'm your tenant, a pipe breaks, I have to move out for 2 months. Your landlord policy will make you cash flow neutral. They'll pay that rental income. They'll audit your books, but they'll pay it. My policy as a renter will have loss of use. I can go live at a hotel. Guess what just happened? You're now whole. I'm whole, and I'm coming back to your house to rent it again.
Yeah.
How would that have worked during COVID and stuff? Would there have been any would that have held like a landlord? Because obviously there was lots of problems with COVID and people were not getting paid rent and whatnot. Would those policies have kicked in and helped?
No. There has to be a claim.
Okay.
It's a great question, Phil. It's the same question I was asked by business owners of, hey, where's my business income coverage that you told me about? I'm like, we exclude pandemic. Sorry. I mean, it's not a great conversation, but no, when there's a claim, I'll replace your rent as the landlord. I'll put myself as your tenant into a hotel, and I'll replace all my personal stuff. So if you love just because you had a pipe break doesn't mean you want to lose your tenant.
Yeah.
You bring them back.
Somebody drive a vehicle through the front of a building, and we have to repair. So in a case like that, that's what you're referring to.
That's exactly. Yeah. So if there's a claim and they have to move out because they're doing the work, then both policies work well. And I tell every landlord, you should, and it's a legal question, right? You have to have it in the lease, and that's an attorney question. That's not a Rob Bowen question. But then the rental policy will list your building, whatever LLC owns it, as additional insured. The reason you'd want to do that is that if I'm your tenant and I cancel my renters, the insurance company will tell you I canceled.
That's definitely a big plus for landlords.
It's a big plus, and you have to check every year, and it's very easy to get. But it's a lot of paperwork, and I know a lot of landlords that don't like to do it. But I'm like, you really need this, because one lawsuit, you could be in trouble.
Rob, just having this conversation with you today has gotten me going, I got to call Rob when we're done with this.
Well, that's good. I guess that's a good thing now.
I'm going to say in closing, Heather's got one more question, and then I'm going to close this out.
One more question that I think is really beneficial to realtors is, if you're working with a buyer, a lot of times people will ask me, families will ask me when they're purchasing a home, well, what is our insurance going to be? And even though it's not my job and I'm not the insurance agent, it is always helpful to have, well-rounded knowledge. And so I like to be able to give them, an approximation of what to expect. Because a lot of times when we sit down and we make an offer, they're saying, well, what are we going to be paying per month? So I calculate their mortgage payment. I calculate, amortized over 30 years, of course. I do their taxes. And I like to include the homeowners insurance. So my question to you is, for all the other realtors that are curious, what's a good rule of thumb when you're calculating an average homeowners policy for a home? Let's say between $300,000 and $500,000.
Okay, it's a great question. It is geographic specific. So I'll just do a generic, Orange County typical home on an acre, let's just say 3,000 square feet, 2,700 square feet. we're seeing pricing from about $900 to $1,200. Those are for newer homes. You know, if all of a sudden there's a home built in the 1900s, that throws a curveball into it. If they're in more of a city where there's typically more vandalism, that's going to go up. But as a generic, we'll see in the 800 to 12 to 1300. So, you know, typically I tell people $100 a month is a fair assessment.
Okay.
Unless they have 12 trampolines, a pool.
Well, exactly. Thank you. And if they have, you know, again, if they have, we don't like trampolines, we don't like slides, we don't like pools. We also don't like wood burning stoves. We'll do them. We're not a huge fan of them. So all that's going to crank up.
What about pellet stoves? They don't produce as much like creosote and anything like that. Is that still considered the same thing?
It's still a solid fuel heating device.
Okay.
Like we don't like solid fuel heating devices in vacants.
Okay.
We're not a huge fan of landlord policies that have those, because now your tenant is playing with fire, literally. We don't like pools, but you know, you can get all that. And what we're starting to do is we're excluding the liability of a pool.
Okay.
Or we're charging a surcharge. You didn't bring it up, but I will bring it up now if that's okay. Dogs.
Yep.
Okay. New York State just passed a law that as of June, we're not allowed to discriminate against certain breeds of dogs. We, as insurance carriers, have been doing it for decades.
Yeah.
We don't like, and I love dogs. So let's start there. So people don't think I'm a dog hater. I love dogs. We don't like pit bulls. We don't like German Shepherd. We don't like that crowd.
The dogs that bite, that have
the dogs that bite. So, but as of June, we can't discriminate anymore. So what we're doing is we have to either charge for it, or we're having now this is a homeowner's policy. We're having, you know, we'll exclude dog liability. So I don't know where this is going to go. Right now, we're still including it, but I think we're going to start excluding all animals, and you have to go out and buy, which is not the right thing. They were trying to protect the consumer, and it's not going to work very well.
Okay.
But yeah, we're not a huge fan of dog. We don't like dogs in landlord policies at all. Yeah. For obvious reasons.
I mean, it's statistics. At the end of the day, it's about risk, right? And the stats are there to give you the risk factors. And
especially with dogs, because dogs don't bite you and me, Phil. Dogs bite the 3-year-old. Yeah. Because they're at the same level as a dog. And you will never, ever in a million years win that lawsuit, no matter what that child did to that dog. Yeah. So, and they're nuclear verdicts, because that child now has a permanent disfigurement, has a permanent disability. Right. And again, I love dogs, but in the insurance world, we're just not a huge fan. Yeah. But it's going to get easier, I think, with this law, but that's where the dogs lay.
Well, Rob, I just want to say, if anybody made insurance sexy, it was you today.
I don't know if that's true, but thank you. I'll take that.
I will say, I think that we hit on a lot of different policies. I think that it was very informative. It was a great refreshment for me, and I even learned quite a few things in the conversation with you again today. So with that, I just want to thank you for coming on, and let's give people, we'll put it in the comments and stuff like that. But if they want to get a hold of you, just tell them what your company is, maybe a website, where they can, check you out and reach you.
Okay. I'm actually physically located in the Chester ShopRite Plaza. We still have an office despite 2 years of COVID. Okay. My email is rob@insuranceleadership.com. And my website is insuranceleadership.com. There's quite a bit of information. We are focusing on creating videos for people. Awesome. So we're trying to put education, put stuff out there for people. They can come on, look at the video, ask questions, whatever. So certainly reach out at any time. And our office is 845-610-5700. Call me or my team anytime. We're there to educate. I know you hear that a lot from a lot of insurance people, but it's not about selling a bunch of policies. It's education and making people comfortable, because we're expensive. It is what it is. But when you have a claim, you want to make sure you got
when you have a claim. Yeah.
You get what you pay for too. So.
100%. And my job is to educate, and we write full blown policies, and then the client can pull stuff away. If they don't want certain coverages, that's fine, but that's their decision, not mine.
And where do you, what areas are you licensed and stuff to serve?
Insurance is done by state. So I am in New Jersey, New York, Connecticut, Pennsylvania, Virginia, and Colorado.
Okay, awesome. Well, Rob, you've been very informative, and we thank you for that. If you're looking for a great insurance person for your toolbox as a realtor or an investor, definitely consider Rob. He's a great guy. We work together. I wouldn't have him on if I didn't believe in his integrity and his competence. So I'm going to sign off on that note. I hope everybody out there has a wonderful night. God bless you, and we'll see you on another episode of Rockstar Partnership next week. Take care.
Yeah. Thank you, Rob.
Thank you guys. Appreciate it.